Okay, it's recorded. Michelle, I will mute you. I'll mute you. All right. All right. Cool. All right. Hey everyone. Thanks for waiting. So we'll just kickstart now. So I will just start with the disclaimer. So like I said, it's all the result that we're going to show you guys is all the real results. So all the information that we prepare here is doesn't take your personal situation or like financial situation in the consideration, and of course all the information that we share here for education purposes. So anything that we share to you guys, please perform your own due diligence, and at the end of the day is your money that you manage, right? So you need to understand what you're doing with your money. So please do your own due diligence, so you are responsible for any outcome that may result from decision that you make. All right. Cool. Just we always going to start with a quick market update. So as you can see now, SPY, which is S&P 500 top 500 companies. So yeah, I think believe in around this March area. I did the webinar we just mentioned. Hey, I couldn't see much pressing concern or anything. So economy wise is doing okay. So we should start seeing that it will bounce back up. Then I did mention probably on that February or Jan. So we'll seeing correction, especially around the tech sector, which is we saw that, and the tech sector has been also like going sideways. Some of them has been recovered, some of them has not. So I'll say like still a lot of many opportunity around those sectors. So SPY wise, it's been going up, and it's been also like in the past few I'll say almost 2 weeks, it's been hearing great news with all-time high, all-time high, all-time high. So which is a good, I'll say it's good recovery. However, like I just want to share this earnings season will be coming very soon. I'll probably say it's already start. So whenever we start seeing the earnings season, this is what we call we'll start seeing another volatility. So we will expect this could be dropping a little bit again. So but overall, year to date, S&P has been doing amazingly well. Also, like year to date, it's been more than 11%. So just giving a benchmark, overall, people expecting overall S&P 500 trading like around 7 to 10%. So clearly, this just a quarter basis is already outperform what we call outperform that the historical return. So in terms of that, because of the market has been going all-time high all the time in the past few weeks, so we start seeing what you call this fix is volatility index. So it's known as the fear index. So when I say fear index, the reason it's known as a fear index because whenever like there's a market draw, or when people like scared or certain things, the fix which is this fix will be skyrocket up. So this happened around that COVID time. So when the market recover, the fix is start going down. So when we start seeing this is like fix currently at 17. Also, like when we're seeing fix around below 20, so this is where the option price tend to be super cheap. So that's why like in the Discord channel I mentioned is great time for us, especially around that below that 21 or 20 or closer to 20. It's time to buy more of the booster, which is a buy call options. However, on the other side, because fix tend to determine the time value of the option, when the fix is low, that means the time value is not much. So whenever we're selling option, which is what we share in our free course in money maker strategy, when we're selling put option, the premium that we receive is not as high as I would say like during the coffee time. Cool. So of course, we look into this and we reassess where we can deploy our money, and at what strategy is the best strategy to use, especially when the fix is quite low. So overall, that we mentioned in the group, for fix that this low, the best time is to buy the options. All right, either the put or the call. So in our portfolio, we tend most of our when we buy the option, most of them is call options. All right, cool. So moving forward, So this just put a grammar scheme on combining that what we call S&P 500 and that fix. If you seeing that overall fix, whenever there's uh, I'll say not a problem or like issues or pressing concern or anything, your fix tend to go up, and when the share price goes down. So if you see that this is creating what call like convergence stuff, so it's been going, stock price is going up, the fix is going down. So that's why I say like if whenever we see earning season, tendency this fix will be spiking up a little bit. All right. So this is probably something that you will expect in the next upcoming weeks or almost a month. Yeah. All right. So just giving a portfolio update where we at, especially our portfolio in the Q1. In the I'll say at end of the year last year, which is December 2020, we gave the update. We are playing with these 5 teams. So the first one is value play, retail and hospitality. We got credit and banking, electric vehicle, nickel miner, semiconductor is something that we added. I'll say on January, around January, February. So this is something that we added. But if you look what stock that consists that within our portfolio, I got this I'll probably say like Intel, SAP. This is a electric vehicle, which is a Volkswagen, banking, which is JP Morgan, Bank of America, and nickel miner, where this ArcelorMittal and Vale, right? Just a few things. I got a new edition when I share last webinar, which is around the ST Microelectronics and the Infineon. This new edition, where the money coming from. So I did share in the group. So I closed most of my Intel already, which I would say like quite high. I closed Intel and I bought using that money, like the capital and the profit, to buy STM Infineon. So I do still have the Intel, but not much. Probably say like it's on from 6 or 8 contracts into it's only one left. So probably closing is very, very soon. All right. So just looking in terms of the performance based on the few stock that we selected. This is the I'll select performance that we have, and this was the portfolio that I got. So this is the average out into around like 24.93%. So if we look at that, this is close to also like more than double than overall S&P 500. Cool. So if we look at that, I think we'll in this webinar we'll touch briefly on our total investing system. So the goal is the goal of the whole system is try to replicate this, especially this result every single time and every single year for all the students or even for everyone. Hence, we create that as a system. So we'll touch that later on. So, but before that, I want to touch probably like a bit like strategy overview, especially around the what we call a capital gain area or cash flow. Oh, before that, if you have any question, feel free to type in the chat group. And of course, at the end, we have a Q&A. I'll try to answer all the questions that you type in, or you guys can unmute yourself on should ask the question straight away. Okay. So moving on, the strategy overview. This has become also not a hot topic, but people start asking, especially students and everything. So this is around the capital gain and cash flow, right? So I'll touch the first, which is the cash flow. We share the free strategy in that money maker strategy. I know that's is overview. I'll select preview of the strategy, and that strategy is basically trying for us is semi-passively to generating what we call like a cash flow or income. So roughly around like at least 2% per month. So that's the whole original for that strategy. Of course, there's a pros and cons for each of the strategy. That's what we want to discuss today as well. So this, of course, around the cash flow, there's a few variants around them. So first is probably like, I think this is quite common terms now about the dividend. I'll say roughly most people generating average around that 4% per year. And of course, there's a variant like covered call. So this is rely on something that I shared last webinar. So covered call is where on the other side of variation of the our money maker, which is a money maker using like selling put, which is insurance, and this is sell covered call on the other side. All right. So in terms of the cash flow, we'll touch in terms of the pros and cons, right? So of course the pros because of the strategy cash flow, we get a consistent extra income every single month, right? And we do the cool thing with this as part of our portfolio, it will make our portfolio what we call like self-sustainable. And if everyone heard about before, I did mention my cash allocation or cash liquidity is coming from this what we call like cash flow not cash flow strategy, more on the cash flow allocation of my portfolio. So by having this cash flow allocation in my portfolio, that means I have more cash. All right. So this is giving what we call like cash liquidity in the portfolio. And of course, there's a lot of like not a lot of cons. There's some cons regarding the strategy, right? Whenever we talk about cash flow, tendency is we have a maximum or cap return. So let's say we generate 2% per month, right? That's the maximum that you will get. It doesn't matter whether share price goes up 10%, 20, 30%, your maximum return that for that selling cash flow is only that 2%, right? So that's mostly the cons around the cash flow side. And the other things is it doesn't get the benefit when the stock grows, right? Like I mentioned before, it doesn't whether the stock price goes up 10%, 20%, the maximum that you get just the cash like the income when you sell that contract, that's the only income that you will get for duration of that contract. So, and of course, there's few things. If you have everything in cash flow strategy, your overall portfolio return tend to be slow. All right. So you, because you cap the return, doesn't matter stock price up, so as let's say 20, 30%, you have the certain cap when you have for cash flow strategy. However, of course, when you're designing a portfolio, the allocation and everything, you need to look at the pros and cons. Each strategy serve for certain purposes. For the cash flow side, it's just giving us a benefit, especially when your portfolio getting a lot bigger, right? So I'm just giving a little bit overview on how our portfolio, the way we do the portfolio. So we every month we do inject a capital, especially in the early stage. We deposit regularly to grow the portfolio, right? When early stage, when you deposit, let's say $500 for your when you start portfolio $5,000, right? When you put $500 every single month, it does the if you look the numbers 500 against that 5,000, it looks quite big, right? But like I say, if your portfolio getting bigger, let's say 100k or half million or $1 million, your injection $500 and compared to that $1 million is nothing, right? It doesn't give a lot of impact to your portfolio. Hence, the cash flow strategy in to have that in the portfolio, this will make our portfolio self-sustainable, meaning it will generate that cash flow every single month. Let's say you have $1 million, if you generate 2%, that's like a lot of money, right? 20 grand to generate a cash flow every single month. So that will help you can use that 20 grand to buy asset, buy shares, or even for capital gain strategy. So that's how we look into both side pros and cons on looking this strategy and allocate them into our portfolio. All right. So moving on, the capital gain strategy. This is mostly around like holding shares and the strategy that we have, which is called booster. So this is just the terms around that buying call options. The whole goal is this is where we're holding a growth asset. So I'll explain. A growth asset is where you know the company that you buy is to have a tendency or have a good projection to grow over the longer period of time. So the whole thing is to have the capital appreciation, and we don't looking for the when I say like future profit, we don't look into the a month basis or 2 month basis. Of course, we're looking at least to more than 1 year. So of course, we want to look as the long-term view. And like I say, all strategy have pros and cons. Capital gain as well. The pros, of course, is high return, especially using booster. You get a very high return for a small share price movement. So this tendency will using this strategy tendency will have what we call like limited risk. So let's say I put $2,000 for this booster strategy. If the share price goes to zero, doesn't matter. Let's say share price from $100 goes to zero, the only maximum loss that we will get is that booster position, which is that $2,000, which is a limited risk. Sorry, let me clarify again. When you do booster, which is call option, normally you control 100 shares, right? So when you do 100 shares, let's say a share of $100, so 100 share of $100 tendency, you need to have the $10,000. But using a booster strategy, you tend to have, let's say, allocate 20 to 30% of your capital, let's say 20%. If the share price goes to zero, your loss is only that at $2,000 from the booster call options. All right, so that's why I call it limited risk. With this strategy, it helped us to grow overall portfolio roughly 2 to 3 times than the benchmark, right? So if you see that before the benchmark, S&P 500 performed around like 11%, our overall average portfolio is already like double. Of course, this is the way we do strategy works. It will give what we call exponential return. Tendency the first few months or uh, half of the year will be slow, but then you will have that what we call like a spike towards the end. All right. So overall, tendency we grow 2 to 3 times than overall benchmark. So of course, with the capital gain, because we owning the asset, we owning that contract, we can sell anytime that if needed. All right. As let's say it's already making money 10% or 20%, you can just cashing out and use the money for something else. All right. Of course, the cons is around when you do a booster, you have your capital tied up. Depend on the contract. For our strategy, we tend to have like more than 1 year contract. So then you have your capital tied up for more than a year. And of course, like I said before, the price you can sell anytime if needed, right? And the other things you can't predict or project this strategy as an income. You don't know how much you will earn every single month. So you can't predict or can't project how much you're gonna earn every single month. Because of that, you can't consider this as a what we call like a cash flow or income strategy. So whenever we have this capital gain allocation, we teach all the students to review the portfolio not every single day or not every single week, but we teach the student to review the portfolio, I'll say every month. That's the also like the earliest. Mostly it's every quarter, or once you get into the bigger portfolio on certain size, then you might review every year. All right. So the next question is how much should I allocate around this, right? In our academy, we use what we call like 80-20 principle as a general guideline. So 80% is where we holding asset and booster, and 20% when we have for the cash flow. When we this general guideline design is for most of the people that goes into the investing, especially go to the academy. Their goal is to grow their portfolio, right? So we don't want to have too much in the cash flow that to reduce. Then that means your portfolio can't grow as fast as we expected. To have this balance, it will, of course, this is creating a system where our student, when you grow the portfolio into, let's say, more than $1 million, the principle, the technique, and everything still the same. So this is just all the percentage basis. So if let's say you have $10,000, that means you're 80%, $8,000 in your holding asset and booster, and $2,000 in cash flow. If your portfolio bigger, let's say $1 million, same principle, right? 800K in holding asset and booster, and 200K in the cash flow. So this is just creating a simple, I'll say a breakdown. And every single time you look into your portfolio, you follow this allocation. However, of course, depends on your life stage, depends on your goal. This allocation number will be a different, and it really depends on each individual as well. All right, let's move on. So I will do a brief overview of our total investor system. Mm, this guy called James Clear, he's the guy that write the book called Atomic Habit. So he always mentioned this, right? All those successful, or the winner or loser, everyone's out there, even that you're successful or unsuccessful, millionaire, or even that poor people, everyone share the same goals, right? They want to be a winner, they want to reach $1 million, or they want to be a billionaire. But a lot of them has a different outcome, right? It's not about the action that they're taking. Sometimes they follow the same action and everything, but it's not differentiated because of just the goal, right? Hence, in the investment total investor system, in our academy, we create what we call a system where we can replicate this result for all our students, for everyone, every single time consistently. All right. So I'm gonna go through a few principles in our system. So if we think about it, if a lot of people looking the stock market, let's say in 1 year view, you can see a lot of movement, right? It's very choppy, up and down, up and down. This is what you look at every single day. Every single day, you're gonna look all those price movement, or like it's very outside, like very volatile, and depends on your personality and everything. Some people can handle this, some people can't. But what I know, 95% people can't handle the volatility of the market. Hence, this is something that we don't want to have, right? We don't want to, especially around investment, we don't want cause stress in our life. So this is something that you don't want to do, looking investment in very shorter time frame. So what we do is we always looking the whole our portfolio in the long term view. So if you look this, right, this is just a briefly around like almost 10 years of portfolio, 10 years of performance of S&P 500. So if you see that the movement like up and down, yes, of course, there's always up and down in the share price movement, but it's not as much or as crazy as the previous slides. So every time we teach our student, whenever we pick the company and everything, we always want to focus on the long term. I would say like more than a year, right? So so this is what you want to do. Looking the investment, have a target roughly like what's about the company and everything, whether they can grow in the next 5 years. So long-term view become helping us to give sanity and give a peace of mind when we review our stock or review our portfolio. So, and the other things, what we want understand, all the share price is moved based on the transaction between buyer and seller, right? And if you all those share, right, they have the what we call a maximum downside at $0. However, the upside side, right, it can be unlimited. Share price can be the all-time high. It could be $20, but in the long run, the share price can go to $200. Could be $2,000, $3,000. Some could be like $10,000. I think some of the stock reach to like what we call it $12,000. So some stock or some share price can be go up and up and up, right? So that's why I say like the upside is unlimited. If you compare the upside and downside, of course we want to put in the high probability side, which is look we all the strategy that we play tendency focus on the upside. A lot of the strategy that we build in the way we mitigate risk, it comes to a lot of other process. So the first thing is we look for the what we call like quality company. So part of our process, we use what we call a value investing principle, right? So this is where Warren Buffett make it famous as well. He said like we want to buy a great business at a ridiculous discount, right? So this is the what we call like the only stock investing methodology and proven to work since 1920s. So I know in the value investing, there's a lot of people out there mentioning, hey, value investing using certain numbers and everything to calculate. But if you look the principle itself, you are going to buy what we call like a great business at the discount. Of course, everyone assess discount and everything differently. Everyone assess great business differently. So in our system, we do have our category on how we mark them as a great businesses. The first thing that we look is more like quality aspect from the company, which is this known as a competitive advantage. So there's a few questions that I tend to ask when I look into this company, right? So if the first thing is what or where are the product or services, why this company can grow or sustain for the next 5 years? Do they have a lot of customer? Do they have raving fans? If they do, tendency the product tend to be survive or growing, right? And of course, can anyone replace this product easily, right? If they can, then there's no point for us to put a lot of money into this company. So we want to look company that have a what we call a competitive advantage to grow and survive for the next 5 10 years. So with the current era, especially you heard a lot around industry revolution, evolution of things. It's all come from one thing about innovation, right? We want to understand whether this company is still disrupting the market, or are they innovative. Even the old company, we still want to assess, are they still innovative to maintain the position in the market. So this is what we call like a competitive advantage, right? So a few tips, if you saw a lot of our presentation before, or even like people out there, um, a lot of information here, the competitive advantage come from, every company, they have what we call investor relations. You can always go there and see the company strategy, even like looking the numbers, even like looking where the positioning in the market, what's the next goal, or what's a new R&D or new product that coming up. So all of those is in the what we call investor relations. So it's not that I actually work in the company that I know everything. Not really. So everyone can do that. That public information. You can assess. You can Google that investor relation, let's say Nike, Nike investor relations. You can look all the slides, even the presentation, even the podcast. There's a lot of information in there. So definitely uh, you can get all the answer from this for this question from just that investor relations, right? The next thing that we look at as well, part of our system, is we look into what we call like the numbers, right? The financial. We do have, because we create a system, we do have these tools, what we call auto analysis tools. We can just enter the company name and everything. It will put all the information like EPS, the margin, cash flow. So we do, they have a different meanings of, for each of the category represent criteria for a great business, whether profits, whether they have a high return, whether they have a lot of cash flow, whether they have a lot of debt, whether they can turn around our money really fast. So we assess everything from there, and we use a scoring system. Then we just tell you, hey, what's the score out of 10? So this is just help us to, for all the students, we use these tools. Then we just like type in the company name, bang, just put all the information. Then we know whether that's roughly what's the scoring. Then that's our second stage of the process, right? Qualitative aspect, we're looking the numbers. After that, then the next stage of people asking what's next, right? So we have this what we call a timing system. So a few guiding principle, the share price is always zigzag, right? It's always up and down, up and down. So a lot of people asking like, when is the best time to buy, right? So if you just listen to people out there, that hey, just buy every single time, but it doesn't work that way. So if you don't even know when the price will go up or down, so because I don't want all our students to have what we call like guessing, right? So we create a system. We use a same combination of technical indicators that share for all the students that we apply for all of our charting platform. Then whenever we assess using the same timing system. So if you look, this is just a roughly timing system that we got. So we tend to buy the company when around this what we call like this green zone, which is a buy zone, right? So this is where the time when we buy, right? The second time, which is around April. So once we buy this, we let the share price to move, right? They can do whatever they're doing. They're going up and down, whether they keep going up, whether they sideways, they can do whatever they're doing. However, we know the tendency in the long run, they tend to go up. So we have a high probability for a great company, they're going up. So this one system, and second is this apply for pretty much for all the stock, right? Before is Facebook, this is Nvidia. So we have chance in here, we have another chance to buy in here. Let's say we buy in here, this is where I bought it. So this is the will tell you, hey, the share price of Nvidia from that time is moving more than 200%, right? If you look the using the same system, you look at IBM, hey, the timing system is not that great. It's giving a red color. That means it's not a good time to buy. And of course, we look the analysis of the, if you look the step one, step two, and this is step three, right? The step two is we look in the numbers. The numbers doesn't look that great. So if you put it all together, that means it's not a good company to buy right now. All right. So of course, after that, in our system, we do have what we call implementation strategy. And this is pretty much, I'll say, is pretty straightforward, right? So the first is simply just buying shares, right? So this is where we want to build what we call an asset. We want to buy and keep holding them. So when we buy shares, that when the time to sell it is mostly when I'll call investment thesis change. By saying that, if let's say investment thesis, when you buy this company because they produce certain product, they're leader for certain things, if that's your investment thesis, that's fine. If they change, let's say they lose they lose the market position in the market, they lose the customer, they lose certain things, or their product is there's a flaw of their products, of their flagship products, then it's against your investment thesis, right? That means it's time to sell. Whether that's you're making money or not making money, it's time to sell. All right. So that's how I assess the company mostly. The second strategy that we got, which is a booster, which is a buy call option, right? We sell when we reach a profit target. Most of the students we teach to have a profit targets roughly around that 30 to 50% as a minimum. Then majorly we try to target around 100% profit. So when I say 100% profit, let's say you put $1,000, you will get another $1,000 as a profit, and you get your capital back, and you get that $1,000 as a profit. So that's what we call like a 100% profit target. Next, this is where we sell put, just do it monthly. This is what we call like money maker strategy, and that's the only strategy that we got. So this is simple, just 1 to 3 steps, assessing the company, simple 3 strategy that we use all the time. And I know like people asking like how that booster works, right? So just giving example quickly for the booster, right? So this Intel. Remember I bought around this time. I forgot to put the timing indicators before. This reached our timing, so we bought this here after I assessed the company. So it dropped here. I've been waiting. I assessed the company, so I bought around here. So these companies will move around that roughly around 47%. That's where I sold them, right? So if you look back, I'll probably say I didn't get the top of the top, but still it's really a good return, especially just holding the shares 47%. If you look at this stock, is moving that 47%. If our booster all after close all of them, our return around like 158% just for this Intel position, right? So this is the cool thing with the booster. It tends to give like 2 to 3 times of whatever the share price, the stock movement. Cool. And this is something that I posted that before on the Volkswagen, for just giving example, right? Volkswagen stock up like around 80%. Our option, which is a booster, has up more than 180%. So it's double, right? It's not triple, but it's double. In terms of the contract wise, this contract still have what we call until December 2025. So that means I still have, I forgot this year, or roughly around 4 years. So I still have plenty of time for this option to move. The tendency when the option closer to the expiry, the it's probably too technical. The share price and the option price tend to move the same, a dollar by dollar. So if the share price move $1, the option price move $1. So that's why when we buy the options, we buy, let's say, 1 year or 2 years time frame. So this is considered what we call a defense mechanism. So we don't know when the share price will move, whether that next month or 2 months or 3 months or maybe 6 months. The tendency over like more than 1 year, they tend to move up, right? So that's why we put that as a lot of buffer. That as when we buy the contract with the booster call option, we buy more than 1 year. All right. Of course, at the end of the day, we want to build what we call a portfolio, right? So this is the portfolio that we teach in academy. So this is called a wealth portfolio. Whole goal from our like the whole teaching is we are become the collector of great companies, right? So this is just a nice breakdown for the portfolio. So an asset which is just a buying shares, which is around that 50% of our allocation, booster which is around 30% of allocation, money maker is cash flow around 20%. So when I say 80%, which is 20% principal, booster and asset, I tend to put them asset together as a capital gain. So 80 and 20 for the cash flow. So of course, everyone will not be able to follow this straight away. We do have what we call like a portfolio journey. So everyone, whether that portfolio, let's say, start from $0 into, let's say, $1,000,000, every milestone have a different purpose or different goal. And whenever I'm just giving a tips, so whenever your portfolio less than 25K, your goal, you want to grow your portfolio as fast as you can to grow them, right? So then when we start with the whole journey, the principle, we start with what we call a booster, right? So that's, if you see, I'll share that soon. That's why you start seeing people, like if you see one of the student before they able to grow like 100% profit, 150% profit, that's when the portfolio quite small. So once you get bigger and bigger, your goal is not grow as fast. Your goal is try to preserve your capital as much as you can, right? But still have a nice growth. So once you get to the whole complete stage, the speed of growth compared to people that just start with let's say $1 or like $1,000, the portfolio return percentage will be different. So your goal is not try to beat your other students. The goal is try to be able to get a good result for every single time and to have that consistency every single year, right? So it's just a few things. Oops, doesn't show properly. All right. So this is the past performance that I personally got, like 2018 around 20, close to 23%, 2019 close to 80, 2020 close to 90. So this is the return in terms of the past performance. 2018, I forgot. I think this is when S&P 500 negative on that year, but overall whole portfolio, as in the past 3 years, this is when I start tracking for publicly. So this is performing more than I'll say more than 30% quite consistently in average. I know this is my result, but if you look back, this is the when I start looking at my student performance, all of them able to also like replicate them, right? So it could be like more than 40%, 30%, could be more than 50%, 80 or like 90%. Also like all the students, some students that not perform really well. So average out, we still, as the whole group, we are return more than 70%. So that's why I sound like we create a system where we want to be able for everyone to replicate this also like a great result every single time, every single year. So, and yeah, so that's all my presentation. I hope I'm on time. Yep, perfect. So I'll probably say like I'll start that Q&A like for the next 10 minutes. If you have any question or any feedback or anything, let me know. You can unmute yourself. Having that two-way conversation would be awesome. Probably a few things, few updates. I'm probably in the next until next month will be crazy busy. So I'm going to attend this what called like Tony Robbins Wealth Mastery event on this weekend, and I'm moving house on end of April. So throughout the whole process is gonna be crazy busy here and there. I do got a marketing agency that I just hired, so might have a lot of meetings here and there. However, if you would like to catch up on anything, feel free to reach out and organize the time as well. All right. So if anyone have a question, so who we got here? Cool. Thank you, Ida, for joining us. Cool. All right. So if you don't have any question, that's awesome. So if you do have, then you are shy, feel free to reach out. And you can reach out in the, I think student, you got a Discord channel, even my WhatsApp. If you're not student, reach out in my messenger. Happy to get connected, right? And all right, Kaushik mentioned. Yep. Hey, Kaushik, let's organize a catch up one-on-one. So we'll look into your portfolio and everything. So look into where we can improve them or where you can go next. All right. Cool. So yeah, thank you, Crystal. So if you don't have any question, I will say like we'll end tonight. So we'll see you guys next month. Thanks everyone, and have a
Thanks,
good night.
Henry.
Oh, Maidam asking where you moving to. We're moving to Rhodes. Feel free to say hi if you're nearby, and happy to catch up with you. I think Michelle is laughing straight away. So
Yeah,
yeah, so
I'm
moving
gonna be closer
closer
to
to
you soon.
Michelle. Yeah, I'm gonna ask my wife to bother you with the yoga and everything, but
No problem.
so yeah, so moving to Rhodes to what we call like the new project, which is Road Central. So this is, yep, it's not near that train station. So it's
Awesome.
easy to catch up with many people on new train station anyway. So yeah, so yeah, have a great night everyone, and I'll catch up with you guys one day.
All right. See you, Henry.
Bye bye everyone.
Bye.